When the Fed cuts interest rates, it's not just Wall Street that reacts. Your job hunt can change overnight. In the next 7 minutes, I'll show you exactly which industries light up first, when the best opportunities spawn, and how to gear up so you're first in the fight. This is your rate cut job hunt playbook. Let's load in. So the first thing we want to address is the macro side of things. And what that means is it's what the rate cut is and why it matters for hiring. Essentially, when the rate cut happens, it essentially makes borrowing cheaper. And so companies are going to start to expand. And when companies expand, they have to bring on more workers. So there's a higher demand for workers, which means more roles and open opportunities for hunting, for job hunting. Now, of course, we have to preface this by saying we understand that this market is changing with the advent of AI and new technologies and new types of jobs and new roles. But the trend is still true in the sense of what the rate cut is intended to do. So the likelihood is strong. So here we have a table that kind of shows some of the high probability for loot zones or job opportunities, as we like to call them. So the various sectors that are going to take place here, it's what we expected, which is construction, real estate, retail, commerce, manufacturing, your tech, and your software as a service places, and your logistics and transport. And the reasons why these sectors are starting to blow up a little bit more with rate cuts is because mortgage rates, they're going to essentially revive the housing demand, which means there's going to be more construction opportunities. There's going to be more real estate agents trying to sell homes, more people trying to buy homes, and more people trying to fix their homes because the prices essentially have shifted in favor of the consumer. Also, when we think about just general spending and shopping and period, you're going to see an uptick in hiring because you have to have workers to support wherever the consumers are going to go spend their money. Likewise, same thing when it comes to the actual products themselves. So when it comes to that manufacturing, there's going to be a little bit of a cheaper situation when it comes to financing the actual equipment. And when you have cheaper financing for equipment, that's when manufacturers tend to ramp up their production. So this, of course, you have to remember is going to take place over the next 30, 60, 90 days and even a year out. But these are kind of the bedrocks that are being placed in. And as far as technology goes and startups as a service, this is the bread and butter and why we saw so much activity over the last couple of years when it came to new businesses and startups in general. They're going to find funding for their various services and platforms a lot easier in a space where the rates aren't as high. And most importantly, we get to the end and we think about logistics and transportation. There's going to be a need for the manufacturing spaces, the construction spaces. They have to be able to move their materials, and those there's going to be a need for someone or some entity to help move those materials around. So that is going to create essentially more jobs. And some of the roles that are spanning across this space, you've got project managers, you've got merchandising analysts, digital marketers, process engineers. Those are going to be big, especially in manufacturing. Product managers, those are not going away. UX designers, because these are the people who are designing those interfaces for people to come in and shop and consume. And those are very, very, very much in demand or going to be in demand. And then operation coordinators and fleet managers wrap up. Now, the key is, of course, all of these jobs become available. You have to know when they're going to become available. And of course, no one's going to be able to predict exactly when, but we do have data that points back to the typical cycle that occurs for when these jobs start to pop up. So usually within the first couple of months, that's when the sales and marketing and planning roles start to pick up steam. Right. And then within the next 3 to 6 months, that's when the operational piece starts to come into play. So the product managers, as I mentioned earlier, start to come more. You'll start to see more of those types of postings. And then as we start to look at the broader scheme for 6 to 12 months out, if this goes according to typical rate cut ventures, we'll start to see those support functions scale up. And that's the key part. So for my gamers out there, this one's pretty simple. I like to use a tactical loadout, but this is essentially referring to your resume, right? So you want to make sure that you have this ready to go. That's also showing off some of those growth phase skills that we talked about for the industries previously. And if you don't have those skills today, there's definitely tons of courses you can take out there that are free that we can talk about in a different video. But also, more importantly, to stay ahead of the curve and ahead of the game, you want to start tracking down the different types of press releases from these various companies, whether or not they're hiring in specific new cities or if they're starting to expand their businesses. You want to take advantage of those and start to research who is doing it, where they're doing it, and who you can get in touch with through various networks to essentially start those warm conversations. And then, of course, you want to network. And remember, so things like this, we've seen it in the past in 20, right after the pandemic, 21, 22, 23, 24. Rate cuts, they don't last forever. Neither do the openings, job openings that they create. If you're interested in more playbooks like this, subscribe to HomeScreen Hustle and let's keep stacking your career